Our next speaker flew in last night from Abu Dhabi and is flying out right after this presentation to his home in Europe. He's an entrepreneur with remarkable energy who created a company called New Energy Finance. He is one of the most knowledgeable people many of us have ever met on the topic of new energy. He went to Cambridge, where he won a thermodynamics prize, I believe. He also went to Harvard Business School, and just to embarrass him, he is also a champion skier. Ladies and gentlemen, Michael Liebreich.
Thank you very much. I'm not too embarrassed about being a champion skier because I was only ever the British ski champion. Although I did some other things too, but anyway. So thank you very much to the team that put this together, Secretary Chu, David, for the invitation. What I thought I could do is run through some of the finance, some of the flows of finance that we've seen, which we've been tracking, but also some of the issues that I see going forwards. I tried to answer the question of what is our energy future. I run a team of about 200 people. We're part of Bloomberg. We're part of Bloomberg, the company, not part of Bloomberg, the man. I started the company and then sold it in 2009. So if I say anything smart, it's because I have 200 people doing hard work, and if I say something dumb, then it's my fault. And I'll try and answer the question of the future. Oop, here we go. Although I'm always reminded of this every time I do, which is prediction is very difficult, especially about the future. Niels Bohr, the famous physicist. But let's stick to stuff that we do know. I'm not sure which direction to point this. There we go. And what we do know, because of the part of that team that stands behind me, actually enters all of the data into a data set. They're based in South Africa, the people that do this. There's about 40 of them. And this is the investment flow into what we call clean energy. For the purpose of this, it's renewable energy, energy efficiency, smart grid, carbon capture. It doesn't include here nuclear or natural gas, although those are very clearly part of any long-term solution. And what we can see is that investment, 2004, 54 billion, and the last 3 years have been in excess of $250 billion. This very rapid surge of investment. You can see that it went flat when the financial crisis first hit. You can then see that it continued to grow with the help of some green stimulus programs and so on. And then the 2012 figure is actually hot off the press. We've just published that a few days ago. And what we see is that for the first time, investment in clean energy is down rather than growing consistently or at least being flat. But down only 11%. A journalist actually texted me at the end of last year and said, "Is investment in clean energy dead?" And so I thought it was appropriate, rather than call and give a long interview, I just texted back and said, no, just down 10% or so. So there's the final figure, 11%. But you know, $250 billion per year is a very substantial figure, up from 50 billion. And we've tracked now, during the life of the company, well over $1 trillion of investment in clean energy. So one of the messages is that this is not alternative energy anymore. You know, anybody who calls it that now is simply out of date. This is not alternative energy. This is just clean energy. If you look at it and you compare it to fossil fuel, you'll see this is now just investment in generating capacity. It doesn't include the whole of fossil fuel investment, which is still very considerably larger, probably $1 trillion, maybe even $1.5 trillion per year. But this is just generating capacity. And you can see between 2006 and now, this extraordinary turnaround where clean energy has gone from being 10, 15% of investment flows to being essentially at parity with fossil fuels. And if you look at it regionally, there you'll see in the middle, I'm not sure if this little thing works, there we go. In the middle there, you can see Europe. That was the core region. That was the region that invests most of its political capital in the issue of climate change. They were the first off the blocks getting clean energy to scale, renewable energy, energy efficiency programs, and so on. You can see it grew, but then the last year has been very difficult. You see a drop in investment. The US, top left, much more on again, off again. We know that there's some of the policies that tend to expire every few years. That's been a much more difficult investment trajectory. So it's not grown quite as consistently. On the right, you see Asia, driven largely, but not exclusively by China. Very consistent growth in investment. China first, now Japan coming along very strongly, India as well. Bottom left, Latin America, lots of ethanol investment, first of all, then that dropped away. Now they're doing more wind. And this extraordinary evolving story, which is the Middle East and Africa, which was essentially absent from the investment figures, more or less, now has really woken up. And actually, in 2012, there was more investment there than there was in Latin America for the first time. Actually, more investment in South Africa than in Brazil in clean energy. Quite extraordinary. So it's happening everywhere. If you look at it country by country, and this is 2012, so very new figures, you won't have seen these before, you'll see that China is the leading location for clean energy investment. It has been for a few years. Last year, the US overtook China briefly as people rushed to take advantage of some of the green stimulus, some of the Recovery Act funding. China now out there with quite a substantial lead over the United States. We'll talk a little bit more about that in due course. You see United States, Germany, Japan coming along very strongly, post-Fukushima, having to transition to clean energy, then Italy and United Kingdom making up the top 6. If you think that China's going to stop investing in this stuff, extraordinary figures, extraordinary scenes in the last few weeks from Beijing. The World Health Organization's guideline for PM25, small particulates in the air, is 25. China's figure was 993. If you think that China is going to stop investing in energy efficiency, in clean energy of all sorts, and in retiring its coal-fired power station and investing in the next generation, those figures are official, not unofficial, but official Chinese figures for air quality. In terms of the sectors, what you see here is solar is the largest sector for clean energy investment, followed by wind, followed by biomass and waste, small hydro, and energy smart technologies, so the smart grid and so on. What you see, what's missing from this picture is energy efficiency. And the reason is that it pervades the economy. The investment is everywhere and it's nowhere, and it's difficult for my team to track on a case-by-case, project-by-project basis. And therefore, it doesn't appear in this particular variant of the statistics, but it's certainly an important area for investment. So you can see solar and wind. And just to give some idea of how dramatic and how fast-moving these changes are, the energy system as we know it is 150 years old. But here you've got capacity additions in the European generating fleet. And you can see that solar, that yellow slice that's growing so rapidly, this is a technology that you go back to 2005, 2004, it was impossible to even see in the mix. And it's now the largest source of new capacity in the European system. So wind took off earlier, wind is more mature, but the growth of solar has been absolutely astonishing. Europe, of course, perhaps ahead of the game here in terms of solar penetration, but what happens there is going around the world. And it poses very substantial challenges for the utilities. The price of electricity is going negative on sunny days and on windy days in more and more countries. A very challenging environment for a utility to operate in. Now, that's all been very good news. That's the astonishing change, the rapidity of the change, these new technologies. This, however, I said we'd talk about finance, this is the valuation of clean energy companies. Right, so this is the NEX index. It's an index that we've published for a number of years. And what you can see is that over the period from January 2003 through to January 2013, it's gone up, and then it's come back down again. Compare it to the other main stock market indexes, and you can see that's a very painful journey for the financial community to have accompanied energy technology on. And in fact, if you look at it from January 2011, so not even during the period of the financial crisis, January 2011 until now, that's the NEX, and that is the rest of the stock market. So this is an industry that's got very considerable growing pains and has had a very difficult few years. Now, what I'm going to argue, though, is that the reasons why it's had a difficult few years are largely either resolving themselves or they will resolve themselves over time. This doesn't mean that the industry has had its boom bust and it's over, another cycle like the 1980s that we saw. I'm going to argue that this is part of, if you like, the teenage years of this industry, and that actually it's going to be in robust, good health in due course. First of all, Europe, we saw that was the core market, the first market for all of these technologies, the one that took off at scale most aggressively, has been in crisis. There's no other way to put it. It is impossible to invest euros in a clean energy project when you don't know that the euro is going to be holding together. So Southern Europe, very difficult to make these investments. Not impossible, but very difficult. In the US, there's been tremendous uncertainty. I apologize. I've had to characterize all of those debates, 2 years of presidential campaigning. This is my shorthand. It says here, Solyndra, and then all of the above, starting with the wind production tax credit, which we've already seen now prolonged. And that uncertainty, it wasn't so much which candidate would or wouldn't be better. We all have views on that. But uncertainty is something the financial markets hate. So we now move forwards. We don't have that uncertainty. And that's very helpful for this sector. Now, but the most important thing is the underlying economics of clean energy. Secretary Chu talked about some of the cost reductions. This here is an experience curve. In fact, it's two experience curves. The top one is crystalline. The bottom one is thin film solar. And what you can see is that these technologies become cheaper and cheaper. Now, the experience curve is all about the same cost drop for every doubling in experience. And one of the things that we see time and again is that everybody looks at a short-term history, the last few years, and assumes that the future will look like the past. The future doesn't look like the past. Those extraordinary changes, David, that you mentioned with the phones and all those things that we now all do and we take for granted, they didn't take 1 year, they took 20 years. Every component, the screens in those phones, the keyboards, the charging station, everything got cheaper and cheaper progressively. The other important thing about experience curves is they go out into the future. You think flat screen TVs are really, really cheap now? Just wait. They get cheaper, and so does clean energy technology. This is solar, down 80% since 2008. 5 times reduction in the cost of solar since 2008. 20% drop last year alone. Now, it won't keep going at that speed. There were all sorts of reasons. There was a bottleneck, there wasn't enough supply, and so prices stayed high, then they collapsed. But the long-term trend is absolutely clear. Now, this is going to have implications, by the way, not just here in the US. I'm very proud. I've been doing some work with the UN Sustainable Energy for All initiative. In fact, Secretary Chu and I've sat on this high-level group for that over the past year, and that is now going to turn into the decade of energy, sustainable energy for all. And just to see what that means, there you've got kerosene for a couple of lights and a battery charger. Your average Kenyan family might have been paying $4 a week for poor quality light that is dangerous and inaccessible. Solar, for the equivalent services, now $1 a week. One of the reasons I like being involved in sustainable energy for all is we're going to win. It's quite clear that this technology is going to transform energy access in the developing world. Now, wind also has a supply chain. You tend to think of it as these huge, great turbines, much more mature sector. It takes much longer to double its experience. But not only do the turbines become cheaper, but they become better. They become taller. They become better able to cope with turbulence. Weather forecasting becomes better. And so the price of wind, the cost of wind energy also comes down over time and will never stop doing so. Now, here's a picture of a wind turbine, a wind farm in 1984. Here's wind turbines in 2011. That's the process that I'm talking about. Where it's left us is that new coal, by new coal I mean coal that you have to actually, that's not fully depreciated, where you have to pay your interest costs and you have to scrub the emissions and not pollute. New coal, right now, same price as the best wind. So given the choice, you might as well invest in wind. Obviously, you have to deal with intermittency and so on, but fundamentally, wind and coal are now at the same cost. Gas, we heard from Secretary Chu, is going to be at the same cost by 2020, but actually it's at the same cost now if gas is $6. Well, in a lot of the world, gas is more expensive than $6, in Europe and in Asia. But here, of course, we've got gas, which I looked this morning, I think it was $3.57 per MMBTU, per 1,000 cubic feet. So what happens? Well, the problem with that is most of the producers of gas at the moment are losing money. What you see here is the break-even price required for the unconventional gas, this miracle of the new shale gas technologies, the break-even in different fields, ones that produce oil-equivalent liquids, you can afford a lower gas price. But if you don't have those, the dry plays over on the right, you need prices of $5, $25, $5.39, $6 in order to provide a return on the investment for the capital that's employed by the providers of capital to those projects. So if you want to produce an acceptable IRR for the investors, without which they won't provide investment, those are the prices you need in the market. And what we've got, as I say, $3.57. So what are we doing? It's simply not economic to get some of this gas to market, and we're flaring it. You may have seen the pictures. You can see some of the flaring in the Bakken fields you can see from space. And if you don't believe me on this, this is Rex Tillerson, CEO of Exxon, who says, you know, we're making no money. It's all in the red at the current gas prices. So we're going to see higher gas prices over time, natural gas prices, making renewable energy, wind in particular, more competitive. Now, experience curves, I could talk about for all day. Here's another one, lithium-ion batteries. There also we see the prices coming down. The bottom line there, by the way, is the battery in your phone. The batteries in your cars, in electric vehicles and plug-in hybrids, more expensive because they tend to burst into flames if you don't do complicated things to them. But you'll see there, the top experience curve is one we produced about a year ago, and you'll see that the price drop, the costs coming down and the prices of these batteries is coming down faster than was envisaged, than we envisaged even a year ago. What does that mean? That is the line there that you can see. The green line is where they become cost competitive on a total cost of ownership. You buy the car, you have to run the car, fill it with gas if it's the gas equivalent, or plug it in. And what you can see is soon, by the end of the decade, we will see electric vehicles cost competitive with internal combustion engine vehicles. And although the numbers are very small at the moment, you will see those taking off when that happens. So what we're seeing, I believe, is a fundamental re-engineering of the world's energy sector around more distributed, lower carbon, and more secure architecture. It will cost trillions of dollars. It will take decades. It will be supported by government actions, but it will be funded largely by the capital markets. And ladies and gentlemen, I'm proud to say I wrote that statement when I started the company in 2004. And if I can still read it out today, then I think we're still on the same track forwards. Now, it's going to be painful, but then this is car manufacturers in the US in 1903. That's the year that Ford Motor Company was formed. There were 500 car companies. We all know what happened by 2012. But let me talk about what will worry me? So I'm not concerned about the consolidation, I mean, the painful though it is. That doesn't worry me in terms of the trajectory of the industry. But let me just share with you something that I am concerned about. Because if you agree that there is this transformation happening, then you have to be concerned about who is going to end up being the beneficiary, the jobs, the intellectual property, and who is going to end up being the price taker. So this is the location of wind generating additions. So this is new wind farms being built. And we go back here, this is, if you can, I'm not sure if you can see the year, but that's 1984, and you can see the industry is incredibly tiny, 0.2 gigawatts, and it's an American industry. And then we run the clock. That's 1990, it's over there. Then it becomes a European industry in the early years of the century, so that's 2004. And then let's run the clock again, 2005 through to 2011. It starts to head off up towards Asia. Not just China, also India, Japanese becoming very active, Koreans in wind becoming very active, but you can see the direction of travel. Let's look at solar. Now, this is solar manufacturing capacity. Wind tends to get built fairly close to where it's manufactured, or manufactured where it's close to where it's built. Solar is very different. It can be transported. So here, you've got 2003, and you can see there that manufacturing is somewhere between the Americas and Asia and Oceania, not much in Europe. We run it forwards. As the industry grows, it spends a bit of time between Europe and Asia, but fundamentally, it's an Asian manufactured business now. And by the way, it never was primarily a US, because even if you go back in time, Japan has always been one of the strongest locations for solar manufacturing. So that's really the challenge, as to how can one get those sectors to do more of their value add. I'm not sure whether it's just manufacturing, but it's R&D and it's services, more of their value add to be captured in the US. And so the US does not end up being a price taker for these new technologies. And the same obviously goes for other countries. Now, it's the day of service, and I was asked when I put this together to say, well, what should you do? Can I say something inspiring about what energy pledges, hashtag energy pledge, what could people do? Perhaps those that are watching this live streamed or those in the audience. And I decided I wasn't going to ask for anything that was too difficult, because we've all been asked, to walk or bicycle and to turn all the lights off and to change all our light bulbs. We know what the things are that we have to do. We just don't generally do them. But I thought I'd put together 3 things that are actually quite easy to do. So first, hug a climate skeptic and give them a beautiful LED light bulb. It's a really nice gift to give. Second, book a test drive in an electric vehicle. Electric vehicles, when I say book a test drive, the reason is they're incredibly nice to drive. They accelerate, they're quiet, and there's now, we're not talking now about a few specialist manufacturers. We're talking about GM and Ford and Volkswagen and all of the major manufacturers. That one there on the front, that's actually a Mercedes. I hope you noticed the personalized number plate of my company car. And third, and finally, lend someone the money to go solar. So you don't even have to do it yourself. Right? You can have all of the feel-good factor and none of the hassle. You can do this from your PC over the holiday weekend. There's a number of people. We don't endorse any of them, obviously. But you can help other people to go solar even if you don't do it yourself. And I'll leave you with a quote from, I think, one of the great energy thinkers, an American energy thinker, Amory Lovins, Rocky Mountain Institute, MacArthur Genius Award winner, extraordinary contribution over many years to thought leadership in energy. And he said, our energy future is not fate, but choice. So at the end of the day, I don't need to predict the future. What we actually need is for you, everybody out there, to go out and build the future. Thank you.